Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the market PMI flash just came out 45.7 from the 46.0 that was the Reuters poll. You can see here we did have a pretty good little run up here, and that appears to have been on the French PMI, which outperformed, or what they refer to as solidly outperformed. They're looking for 51.6, came in at 52.9. Now, that's not like way over, but it does show, think of it as 50, the contraction. It really almost solidifies that move above. But then again, we quickly slide back as, of course, German PMIs come in weaker. They're expected to be at 42. They came in at 41.9. Doesn't sound like it's a whole lot worse, but it's, once again, it's worse. And you can see how this euro, you can see pulling down on these weaker PMIs, and the overall PMI now, look at that, comes in at 45.7. They're looking for 46. So we get a big nice move on the French PMIs. I don't know if anyone was long the euro playing it that way, that was available at that time, but boy, this was a nice little run back up here at 1160. Very nice. Of course, today we have ECB day. Then we do have building permits and durable goods. Of course, our usual jobless claims. And we do have market composite flash PMI here in the States. That's going to be at 9:45 Eastern. Market manufacturing PMI. And new home sales at 10 a.m. Eastern, as well as Kansas City Fed manufacturing. That's very low tier, but obviously market manufacturing, a market flash PMI at 9:45 Eastern. As I mentioned, durable goods, but also ECB day, of course, that's going to be the big driver. We do have some Mexican data. But like I said, look how we had such a wonderful run up here to go even above 60, and here we coming off nearly 30 pips. So let's move this out of the way. That German data just really hurt those that were bullish or long on the euro. You can see that right here. You can see here we had 1160 as our resistance. And you can see here we tagged that 1160. We got just above it. And we've quickly gone and faded off of that. Come back in here. We can see right here. You can see it clearly here. 1160. So we made up as high as what? 1162. Almost 1163, and look how quickly we came off. And like I said, we had that rally based on the French PMIs. Dollar yen has moved a little bit higher, but that bias chart resistance is still in place right here with 865. Actually, we've moved it a little bit higher since the Asian analysis, I believe. Cash dollar index kind of middle of the roading it here. A little bit of describer as middle of the road, middle of the roading here. Dollar peso continues to remain weak. I mean, I we'll go with this in the Asia analysis, but like I said, it just really the door's open, to even push down all the way to 1902. We did see a nice move up here in crude oil yesterday. I kept saying I saw a $1.50 rally somewhere lurking about, and certainly we did go in and get that, and then some, and even getting above the key 54.88. Let's go on in. Let's take a look at. You can see here in the Boons, they did take a dip down here. Okay, obviously it must have been right here on the French PMIs. Okay, which obviously would be higher interest rates, but then we've come off that rather quickly, part of the German data. So that dip would provide a little bit of support for the euro, or in this case, bid the euro up, but we quickly have come off of that. And gold just holding steady here. And of course, we talked about the move above with the crude that got above 54.88. Let's go in. Not anything of any real great interest happening across the cross rates. So let's just go on and move into the news. So just move on to the cross rates just while we cover the news. So bear with me. There we go. It says the pound pauses for breath amid the Brexit limbo and the dollar steadies. The British pound stabilized on Thursday as the Brexit project entered a fresh holding pattern, while the dollar held firm as traders took a breather from Sino-U.S. trade headlines. Currency markets are sticking to tight ranges ahead of a key central bank meetings this week and next with Eurozone, Japan, and the United States due to review policy. Sterling held at 29.11 after Britain's parliament backed a withdrawal deal, but rejected the government's timetable. Tight timetable, that is, while European Union members delayed deciding whether to grant a 3-month extension to the October 31st leaving date. This is probably politics. The pound has soared 6% in 2 weeks of volatile trades as Britain Prime Minister Boris Johnson flagged and then clinched a deal with the EU on the terms of Britain's exit from the bloc. Sterling remains at the center of the focus for Forex markets, says Michael McCarthy. It looks like traders are weighing up the current parliamentary shenanigans versus the seeming inevitability of Brexit. Commonwealth Bank of Australia reckons the pound will stay range-bound between 130 and 128 until things become clear. ECB President Donald Tusk said he recommended the leaders of the EU's 27 other member states back a delay, with senior EU diplomats saying a 3-month delay is most likely. Other majors were stable without much news to move the greenback, with trade negotiations now moving out of the headlines. There doesn't seem to be much to spur the dollar in either direction, said Charles McCarthy. Positive comments from U.S. and China trade leaders earlier this week about progress negotiating a truce to their trade dispute has rallied trade-exposed currencies. That has been to run out of steam as concerns about the health of the U.S. economy return to fore. We talked about that. Remember about Texas Instruments? Matter of fact, it references it. Tech industry bellwether Texas Instruments posted a disappointing earnings outlook on Tuesday, following overnight by signs of a slowdown in Microsoft's cloud computing division. Traders also await U.S. Vice President Mike Pence's speech later in the day after his strong criticism of China in a speech in October last year escalated bilateral tensions and triggered a global share sell-off. For now, the dollar has steadied in Asian trade, gaining marginally against the Australian New Zealand dollars, but we're slipping marginally against the euro and the Japanese yen. And the Australian dollar and New Zealand dollars are stuck in a news lull, eyeing resistance. The Aussie and New Zealand dollars were becalmed on Thursday as a lack of progress in either Brexit or the Sino-U.S. trade headlines. Kiwi was idling at 68.54 and Kiwi at 64.18. A dearth of domestic data added to the somnolent tone, with the next major Australian release being third quarter consumer prices on October the 30th. Justin Smirk, a senior economist at Westpac, expects a pick in headline consumer price inflation to an annual 1.8% and to be the key core measure to slow to 1.3. That would mean core inflation has been running below the floor of the RBA's target and band for almost 4 years, a major reason markets are betting on at least one more rate cut. Competitive disinflationary pressures in consumer goods is limiting the pass-through of any weaker Aussie. Given this, we find it hard to emphasize the current inflation breaking higher anytime soon, let alone returning to the midpoint of 2 to 3%. And we'll finish up with the morning bid. About to run the gauntlet of several major central bank decisions as some geopolitical fog clears. World markets pushed again higher on Thursday. Mario Draghi's last policymaking meeting as president of the ECB, European Central Bank, later today is not expected to deliver any new monetary stimulus. but his press conference is likely to defend recent decisions to his credit yet again. Not least as splits on the council have emerged over whether the central bank is doing more harm than good by pushing interest rates and bond yields ever below zero. And expect a rate cut from the U.S. Federal Reserve next Wednesday and possibly more easing from the Bank of Japan are also now on the radar. More generally, market tensions around the U.S. trade war, Brexit, and the latest multinational military standoff in Syria have eased somewhat. Both Washington and Beijing are once again talking up the prospects of some wider agreement next month. Another likely Brexit extension takes no deal fears there off the table for now. Mentions about poor quarterly readings from Boeing and Caterpillar. Let's see if there's anything else. Not really. So let's go on and move into the analysis with that. One moment. Boy, you can see how much. Look, the euros come off on that data. I mean, God, that French PMI data really pushed things up, and look how much we've come off from that 30 pips with European, with I meant to say German data, as well as the overall Eurozone data. Just yanking that down after solid French PMI numbers. Let's go and move into the analysis. So it says the euro paused but managed to hold above 111 pre-ECB. Now that's from yesterday. Resistance is 1160, which we saw that here, and we saw the market run out of gas at 1163, followed by 1192. Support is 1180 for Thursday. So we're going to, I don't know why I keep doing this, doggone it, but it's going to be 1080 here. Obviously, the support can't be higher than the resistance. And it's going to be 1160/90. There we go. So we're looking at the stretches here for on ECB day. In a sense, 1080 would be a little bit of a stretch, but that's where the market, where support comes in. So it's going to be 1080. And on the upside, we're looking at, once again, the 1160 with the stretch up to 1190. Personally, like I said, unless something dramatic happens, I'd be getting the heck out of Dodge if I was long the euro on a run up to 1190. We talked about this because a lot of this is focused on, I'm not going to spend, I did spend extra yesterday on this. Well, we already touched base on this before, but a lot, we talked about this since, obviously we're on ECB day, but I just want to stress the point that I'm looking at. We talked about when we were up in here, we thought the balloons were going to fall. From a technical standpoint, they really looked like they were breaking down. We thought they'd fall. I didn't think they'd fall this far. No way. I thought we'd probably fall to about maybe around here. Okay. But this is what precipitated or actually directed that move in the euro to the high side. As I told you at the time, we were trading at 980 at the time. Look how high. I mean, just a few moments ago, a little while ago, we were up at 1160. But we have fallen and into a very good key value area. And we've come off of that, and we have the potential to rally a little bit higher here. Whether we do or not, we've come into a pretty good value area. So if the euro rallies, I think, which let's say this fell back, I think that would be an opportune time to try and exit out, and we'll see what happens. I mean, like I said, the euro has been kind of back and forth. We'll go back to the main screen again. One could make the case then that we've kind of, if you look at the euro on a daily, we've kind of paused a little bit. So if we would get a little bit of a dip and make one more run, to me, 1209 be the 61%. So that's what I'm saying. I'm sticking with that 1190 is on the upside, and I'd be getting the heck out of Dodge. I mean, something dramatically would have to happen in order for us to move much higher, but we can see what happens. I mean, obviously that would help trip up with what's going on with the dollar index, although it's already been oversold quite a bit. Not that we can't eventually go lower, but I don't know if we're going to do it necessarily today. Maybe we do that, but that might be once we get past the Fed, although the Fed is expected to cut, so that probably keep some pressure on it. Let's go move into the cable. This has surprised me that we've stayed pretty strong up here. It really has. I thought we probably would have slipped back, but let's move on to the cable. Cable continues to keep the major bias pivot 2980 in striking distance. Support remains 2840. So we did go and move. We lowered it to come down to 2950, but we're not that far away from the bias pivot here. If we look at cable, well, that's where we ran out of gas, right there, 2950, and that's been our bias chart support here. And I mean, resistance and remains. We're going to keep the 2950 here, and that's where they ran out of gas just a little while ago. And we've got 2840, so that's going to remain the same. No changes here on cable. Okay, Aussie paired back on Wednesday in a tight range, but closed at 68.50. Resistance remains 68.81 with support at 68.09. So, you know, we saw even the news story. It just says it's kind of stuck here in a tight range. I mean, we've challenged the highs, but we're kind of running out of gas. Same here. That's what I say here. And so no changes here on the Aussie here. So we've got 68.81, 68.09, no changes. And I would expect the same thing with the Kiwi too. You see here, everything still remained the same. No changes whatsoever. It says the Kiwi provided a positive close after flashing a gravestone doji the prior session. Immediate resistance is 64.36 with additional resistance at 65, support is 63.37. That may have raised a little bit higher. You can see here we had this gravestone doji here, and it looked like, okay, now we're going to weaken. But we actually finished a little bit stronger, not breaking out of the range though, but we did finish strong with a little bit of a surprise. But look, we've quickly slid right back down. So once again, on the upside, the immediate resistance is going to be 64.36. No changes there. The only difference is the support is going to be, we have 63.37. FX has been kind of quiet, so we'll probably end up plowing right through this relatively quickly. And boy, this dollar CAD continues to remain weaker. So it says the dollar CAD has been unable to secure a bounce after a strong sell-off. Resistances will still remain 31.36 with support at 30.43. So maybe we'll get a little bit of a bounce here, but we haven't been able to. I would have thought we would have at least come up to 31.36. And we even point out the potential to get to 31.66, considering how far we've fallen. But we're still holding here, even below 131. So, wow, you know, just cannot pick itself up. So 30.43, 31.43, no changes. Let's go on to the peso. Honestly, I'm baffled to find out. I'm baffled to figure out what somebody sees as bullish about this. I really don't see. Honestly, I've already made the case. I mean, I made it pretty clear yesterday too, kind of rehashing. Like I said, I don't have a bone to pick. I think I mentioned on the daily roundup. I don't have a bone to pick. I haven't even traded the peso In quite some time. But like I said, I made the case of, after we'd held and the bullish, and then we ended up falling back, and 1944 opened the door, and a close below 1923.6 opened the door for a move to 1908. We did get the move to '08, and we're just not moving any higher. We're just simply not moving higher. I mean, there's the only thing you can say good about this right now is it's holding at the lows. You see what I'm saying? I don't see what's going to inspire this market to move higher. Now, it doesn't mean that a couple of days later or next week, early next week, someone could say, wow, I thought you said it wasn't going to move higher. Look, I'm saying is it is not bullish, okay? I don't even see anything that even suggests that this market is about to turn things around. You see what I'm saying? If you look at this here, you might have made the case of a minor inverted head. Minor hammer, and it's not even a hammer because the wick's so low. Then this one here, but the market is just basically, it's just treading water. We'd have to get to a 2-hour chart to see something, and we talked about this from the prior Friday of the potential head and shoulder. And we put on here that the resistance has been 1920, and it has not been able to even take that out. So it said the dollar peso remains in a bearish rut. Bias chart support was tagged at 1908, and 1902 is a possibility before the end of the week. Resistance is 1920. So there we go. We did move this down to 02, but possibility. Let's move into the dollar yen. Like I said, with FX being so quiet, there's just not a whole lot of, there's not a whole lot of change in the analysis. On the dollar yen, I put the dollar yen dipped to the 820s, but recovered to close above 860. Resistance is 880, with support at 812. So not a whole lot of, here's 880. Not a whole lot of changes here. Like I said, we did take a dip, but we've recovered. So not really any major changes here in the dollar yen. So the only difference is we're going to move the resistance up to 880. And support is 812 on a break lower. And I've gone and kept this as bearish. The real one reason is because it's not, despite the strength that we've seen here in the SPOOs, dollar yen refuses to go higher. So that's why I believe it's that bearish tilt. Let's go and move into the cash dollar index. Dollar index found sellers at the bias chart resistance at 97.65. Moves to 97.89 are selling opportunities. Support is 97. So we did run out of gas yesterday at 65. That was our bias chart resistance. We're going to go with 97.89. And that's at key level, weekly level. Any moves to that are selling opportunities. And we're just going to keep it down here at 97. So really not really any big changes. We talked about the significance of this 97.89, which is a huge weekly level. It goes way back. So getting below that, any moves back there, the only thing that we would need to close the week above 97.89 just to neutralize the bearish technical picture on a short-term basis. It doesn't turn it bullish. And don't forget, with the Fed expected to cut rates, it's probably going to work as a ball and chain on the dollar, I would think. So we'll see what happens. Keeping the overall outlook in place. With that, we'll go and move into the cross rates. So in the QEN, we had 69.09 on the downside and 69.74. We did make a run up in here. Let's see, look here. Actually, we got as high as 69.81. We had 69.74. Still within the range. You see what I'm saying? So there's no changes here. And as I said, we just haven't seen anything happening in FX overall. So no changes here. We're going to look at the euro yen. We did make a stab in here. We actually got our resistance was 20.98. But we did just now make a stab up in here. Well, that's what's the strength on the euro. Because of, remember, we got the French PMI, which came in stronger. So what is the potential here? Let's go and take a look with ECB day. We're going to say it's 21.72, this 50%. On the downside, let's just go here, 20.35. Let's go move into the euro odd. On the upside, it's going to be right there, 63.75, 63.75. And on the downside, right there, 62.20. I'm not so sure we'd make it down there. At least you know where the risk level is. Get on to the Euro Kiwi. This has really got to be a big disappointment for those that got long on this breakout. Resistance is going to be right there, 75.20. 75.20. With support coming in just below it, 73.04. And let's go and move into the ASEAN. This is all, to me, it's predicated on whether we do see equities turn lower. I think there's a potential for that. So if we do, not that we're going to have it for today, but you have to allow for that because we're not that far off. So the downside is still going to remain here at 73.72. And the upside, I think that's rather limited. It's going to be right there at 74.56. Give it an extra few pips here. Let's go and move on to the guppy. or we are keeping in a relatively tight range. Did get above resistance. I don't see the market would have a tough time getting beyond that area, which it looks like that's what kept it there. That looks right there. You see that area right here? That's actually where they tagged it today. Well, we're going to keep that. We're going to show that as resistance, which is going to be 40.75. And actually, that was a good area for it to get to. Like I said, we still remain bullish. I'm a bit surprised here. The downside, if we do get spooked, well, the yen still, and there's a potential also that the BOJ is going to have their own steps. So let's just put it right there, 38.90. Firming up a bit on that support. And lastly, starting on. Still keeping it firm here. I'm actually going to go right there, which is 89.40. Moment. On the upside, and I'm looking for support. Going to keep it right there, 86.95. Seems like a stretch, but not really. Let's go move into the other markets. S&P continues to remain fairly firm. I'm a bit surprised here, but did see what was it, Michael Santoli saying that we've got that upside bias in what is a very tight tape, but we've got that upside move is allowing this market to stay technically potential to move higher, and it looks like it's doing just that. Gold, remember we talked about that yesterday. I talked about I wouldn't want it a third time. It did come here and we did hang around here, but we have slid a little bit, but you can see the importance of 14.95, and it's been sitting there. Look at that, within a very tight range here. Finally took a little bit of a dip here. Crude, we talked about the significance. We got above 54.88. I actually took a short late in the day, and I see got stopped out for 35 cents. Very, very late in the day, the market just kept moving higher, started, walking over people. I can take a look at that. Bear with me. You can see here, this on a 5-minute chart, we just kept pushing higher and higher and higher. Well, even above that 55.60. We even made a run all the way up to 56. We kind of slid back, but the market's been trading relatively quiet. Gonna have to let this thing sit back and see what it wants to do, or maybe we'll pair back, but certainly still pretty bullish here. And we have seen the cable come off quite a bit. Look at that. After tagging that bias chart with support resistance at 29.50, we've come off a decent amount on the 5-minute. And we'll come back into the main screen. So obviously the big mover is going to be ECB day. And I think any moves up towards 11.90, to me, I think would provide an excellent opportunity to exit out of long positions. But we never know. Like I said, but 12.09 is a 61%, but I'd be getting the heck out of Dodge around 11.90. But that's all we have. Good luck here on ECB day. Obviously, a very short analysis because we just haven't had any movement in FX. But thanks for joining us here. I'll get the bias chart posted, and we'll see you in the daily roundup.